Reliance Industries, that's the cynosure of all eyes. Lots of news flow surrounding the company. Well, and the most important one is that it is inching closer to seal the deal with Brookfield with respect to the sale of its tower assets. So to analyze that, we have with us Ajay Sharma, 18 Hours research analyst, and we are also joined by Sushil Choksey, who has, of course, a very close eye on Reliance Industries. But Ajay, over to you first. Just recap the story for our viewers.
Well, there were reports earlier as well that Reliance Industries is in talks with multiple marquee players, including Brookfield. But now it appears that they are inching closer with Brookfield in particular. As far as their tower assets are concerned, they are valued at close to $36 billion, and part of that stake sale would be utilized to retire debt of close to $26 billion. This will actually go down pretty well, when the announcement actually comes, because burgeoning debt on the books of Reliance Industries has been a bit of a worry for analysts who track the stock closely. But the management has been quite vocal in admitting that they are in talks with marquee players across segments in order to retire their consolidated debt, which has really gone up big time because of high capex. Sources are telling us that a term sheet could be signed in the next 7 to 10 days. So the stock has recently corrected after hitting a lifetime high. But this particular news potentially may excite the stock in trade in the next few days as they move closer to finalize the deal with Brookfield.
Sushil Choksey is now with us. Sushil, what do you make of this deal? It's largely on expected lines, but if it happens, it should provide some relief on the debt front.
Good afternoon. Thanks for having me on the show. As what the Economic Times newspaper has published in today's headline, and with Reliance annual report likely to be rolled out today, tomorrow, any day over the weekend, and the AGM, upcoming AGM, I think the news is the structures in place where Reliance Jio assets are concerned, with current global interest rate scenario and domestic interest scenario and the yield which the assets can give. Based on that, I think the tower assets and all other assets Reliance may be putting up in a structure. In specific where your headline is concerned, the valuation of $5 to $7 billion, and with the InvIT structure or direct sell out to them or on an operational management basis may be worked out, which would be efficient for Reliance. One side to deleverage and the other side for utilization of assets and tap the other customers too, with a neutral player being the larger owner.
When we talk about such deals and such dilutions, it is largely on the expected lines, when you look at this sort of funding, because the sort of investments that they have done, some or the other day they'll need to raise funds.
I think Reliance is already working to deleverage the balance sheet. So be it Jio fiber network or towers are concerned, maybe some other structures may come up, and retail is concerned. I think I'm very sure that next 12 to 24 months, once they peak out on the investment cycle on the phase one, Reliance would put up a structure which would deleverage the balance sheet, and operational efficiencies would kick in where the business plan is concerned for the growth phase.
Sushil, again, when we just talk about Reliance Industries, you think the biggest up move or the biggest delta for any investors which will come is not only from this funding, but you had told us earlier that how it is going to change the face of which it works and move into a consumer company, and that continues to be the main reason to invest into the company?
See, Reliance manufactures everything which is on an import parity basis, be it plastic or fiber intermediates or textile or any other chemical or fuels are concerned. It's all dependent on domestic consumer and some businesses on global consumer. So the global outlook decides the market conditions for these products. And with retail and Jio being added to the story, it becomes more of a consumer-centric play from an India play perspective. Its only thing is we need to see how on a future basis all the three businesses remain in one, or the new shape-up takes place between the various verticals of businesses between retail, Jio and core petrochemical and refining businesses concerned. So as a shareholder perspective, the investment phase out and build out phase, Reliance is the enabler. Ultimate phase where these three structures will stand and how it will be beneficial to shareholders should be visible in next 12 to 24 months.
Right, Sushil. Thanks so much for taking out time for us. Always
Thank you.
good to get